All right, Jason here from Newton's Wave, and in this short stream I'm going to show you how to make money, lots of money, using sine waves. Now, trading is a science, and if you're not using scientific methods to work out where the price is going to go, whether it's going to go up and down, then you're missing a trick. So let me show you this. So here is the candlestick price pattern. We're all familiar with that. But asking yourself this question, how do you think that the price goes up and down with this? Do you think it's by chance? Do you think it's due to buying or selling? It's neither of those. Let me show you what affects the price, right? It's something called sine waves. Now, sine waves basically are behind the scenes, okay, which affect the price movement. Price follows the contours of the sine waves, and they're basically like sea waves. And you get different types of waves. You get small waves, you get medium-sized waves, and you get big waves. All right, so keeping this really, really simple. Behind the scenes, these sine waves are moving, and they hit the beach. That's it. In a nutshell, those two factors, the waves and the beach, are what makes the price go up and down. So let me show you how to predict breakouts using sine waves. Okay, so let's bring the candlestick price pattern back on. So there's your candlestick pattern. Looks pretty bare and naked, doesn't it, without anything else, supporting it, assisting it. So how do you work out, right, how to get the right frequency for the particular crypto that you're trading? Well, this is Lunk. I'm doing this on purpose because it's in flux at the moment. It's about to go up again, and I'm going to show you how to predict the price of Lunk. Okay, so the first thing you need to do is work out the trend or the direction that this particular crypto is going. I'm on the 4-day time frame. You can do it with any crypto. So the first thing you need to do is get the angle of trajectory. Now, this is done by going to the bottom. So here you would see the two arrows. So those are the two bottoms. We'd call that support, wouldn't we, in trading? So those two arrows are two levels of support, right? And that angle right here is basically the support angle or the trend. And that is where we'd bring the beach on. So let's bring the beach on, take those arrows off. So that is how we get our beach. Okay, why am I using a beach? Well, it'll all become very, very clear in a minute. Okay, so let's take the slope. So there you go. So we got the slope, we got the beach, and you can see that the candlestick price pattern is following, it's moving up the beach. Now let's bring the sine waves in, okay? So here's wave number one, and this is where it gets really, really interesting. And hopefully this little stream that I'm doing will show you that there is a lot of science behind price movement. Now you see here, look at that. So where those two X's are, those two crosses, those are the 2 points in which you've got the crest, which is the top of the wave, and you've got the trough, which is the bottom of the wave, right? So those two, now you can start to see that the contour of the candlestick price pattern is following the wave, right? So I said there's lots of waves, didn't I? But I'm going to keep it really simple. I'm just going to do a small, medium, and large wave in this instance. So there we go. There's wave number one. Let's bring wave number two on now. So there's wave number two. Now you see that they hit the beach here, and it follows the contours of crest one. Now we're on crest two here. So let's bring crest two in. Okay, so we got crest one, we got crest two. So there you go. There's the third crest there. So now you can start to see that it's more than coincidence as to why, right, the price is breaking out and collapsing like a wave. The wave goes up, it goes to a crest, it loses its path and it crashes back down. It's called exponential decay. That's what it is when it comes down. Now let's bring the daddy of daddy waves on, right? So this is the big tsunami wave. So you can see it's following the exact contours. We've got this one here, look, one. That was the crest of wave one. This is the crest of wave two. And this is the crest of wave three. So this is why, right, just keeping it really simple, how we predict where the next breakout is going to be. Now, let me prove to you using Fibonacci, because Fibonacci is like our measuring stick to prove and to show that we've got everything laid out correctly. Okay, so let me just move this arrow out the way. Now let me bring the Fibonacci channel on. Let me take these crosses off out the picture here. There we go. Now you can see here, I don't know if you can see these lines here. Well, you look, each of these lines. So this is ground zero here. So the bottom of this fib channel is lying on the beach. We got the angle right. Remember how we worked out the angle? By working out the support where the 2 arrows were. Let me just bring the 2 arrows in for you. There you go. There's the 2 arrows. That's how we worked out the angle of support, the trend direction. Then we lay this fib tool on the direction or the slope of the beach, and then you can see right here we got 0.25% of an angle on the fib. The next wave comes in at 0.68, a key figure in the Fibonacci, and we can see that the next one is going to hit 1 on the fib. So then now we can get our price point here, you see. So we get to the crest of this wave here. So let me make this green. And let me make it dotted so you can see, dashed, there we go, and let me make it big so you can see. So we now know, based on Fibonacci and sine waves, where the next price point is going to be. So what is that? 1. Lo and behold, we know that price figures, they hit 5 and they hit 1 and they hit that resistance and bounce back down. But now you can see why they bounce off certain peaks or crests, right? Because they're hitting the top of the wave. Then it's got to come back down, do that exponential decay, crash down, like you can surf the wave, you surf it down, and then it goes back up again, okay? And that, my crypto followers, is how we would predict the breakouts using Fibonacci tools and using sine waves. So there you go. I told you, didn't I, that trading is a science. It's very, very simple when you know how. And that's why I do these live streams and these videos, because I want to show you price movement isn't based on fundamentals. It's not based on the news. It's not based on pump and dump kind of promotions done on Twitter, on social media. It's happens, price goes up and down because it's following sine waves, right? And when it hits the beach, which is an overall positive reserve. So basically what happens with buying and selling, let's say every day, right? Every day there's either a positive or negative balance left in the bank, pretend, right? So let's say 1,000 crypto are sold, are bought today, then 900 are sold. Then at the end of the day, you'll have 100 left. And over time, if it keeps getting positive, you've got 100 left over this one day, 200 another day, 400 another day. Those positive increments, positive reserves start to build up. And that's what the incline is on the beach. And the sine waves, they only work in a linear fashion. But when they hit the incline, the reserve, the increasing positive bank balance, you get an exponential amplification, and that's what causes the price to go up and down. So I just thought I'd keep this video really simple and show you how to predict breakouts, right, on any crypto using sine waves. So listen, thank you very much for taking the time to watch this video today, to listen to me, and please, if there's something that I want you to do, please study up about sine waves, because trading is a science. Once you start using science to trade, you'll reduce and dry up your losses and you'll make lots and lots of money, right? So, and this is what the pros do. So listen, you take care. I wish you the very best of success with your trading. My name's Jason from Newton's Wave. You take care. Speak to you soon.